And hi, everybody. Welcome to another edition of Your Money Radio. Danny Stewart, Donovan Ward, and me, Tim Razor, with you live. Wherever you are listening to us, we are live with you. So a couple admin notes before we get started with the show. You know what? Before we get started with the show, with the admin notes, I'm going to preempt the admin notes, Danny, to tell you that there is a short seller story I'm really excited to cover. And the reason why is this guy, if you think you're having a bad week out there, stock nerds and market lovers, if you've had a bad week, if you've had a tough week, a trying week, there's a fellow that lost $1 million shorting a stock that I'm going to talk to you about. And you're like, that's not news. No, the way he did it is absolutely positively news. So I'm not saying this gentleman's pain will brighten your day, but life's not so bad. And so absolutely, hopefully someone else's pain, you know, the way, now that I'm saying it out loud, I'm actually using this story as someone else's pain to lift their spirits, Danny. I'm not sure that's actually the right mindset. But we'll get there. Don, nothing from you today? What, Don, why are you looking stoic? What shirt are you wearing today? What's going on?
Oh, you know, the one that got it all started, Rush.
Yeah?
I believe this was the very first concert shirt that I wore on this show.
Oh, I thought you meant like in everyone. Like that's in really good shape. If that's what's your first concert shirt?
Geez, it would be a Kiss shirt.
Yeah.
My first concert was Rush. Very first concert I ever went to.
My first concert was Johnny Cash. I was like 6 years old.
Oh, that's a great concert. Was it?
Were you in prison, Don? Did you see him in prison?
Love Johnny Cash. No, didn't make it to Folsom Prison.
You know what? One of our listeners, one of our dear listeners, she actually texted me and said that speaking of music, Don, she said, as I look down here, she said, loves Neil Diamond. So I know, and when I tell you that I know our listening audience, I know our listening audience. And I'll tell you, Don, I've got you matched with a shirt here today.
Oh, boy.
Yeah, it's that time of year. I'm excited, man. It's every day.
Did you watch a game last night?
No, not really.
It was there are only two stadiums in the NFL week 1 that are going to have fans in them, and one of them last night was Kansas City, and Sunday is Jacksonville.
Really?
Every other stadium is going to be empty. And it's the dumbest thing I've ever heard. If you saw when you see what 20% capacity looks like in an 80-some thousand seat stadium, it's social distancing all over the place. There's no reason not to have this going on.
I saw some pictures of Arrowhead Stadium on Twitter last night, and of course, all the Eagles fans on Twitter spotted the one guy dressed up in Eagles gear at
of course
the Kansas City. Yes, because we're Eagles, man. We spell Eagles out everywhere we go. Danny, it's E-A-G-L-E-S. That's actually how you spell excellence.
I see.
Thanks for that.
Call the two people that care, Tim.
Wow, look at you, Travis Tritt. That is a reference to Travis.
But they ought to just let them play in an empty. I mean, 20% occupancy. The stadium's not make money.
You got.
Like a restaurant where
how do you know
the stadium's full?
No, it's not. You just reduce the number of vendors. And having real crowd noise.
Danny, hold on. Danny, are you letting Don suck you into this? Don't you see what's happening? Hold on, Don.
Yeah, let's move on.
Don, it's not a fair fight for Danny. I'm gonna let me just.
And you're gonna have to straighten yourself in the.
Oh yeah,
there. That's better.
That's better. Yeah, your noggin's like this big.
Well, I was leaning over because okay. Is that better?
I think that's better. Danny, what's behind you?
Much.
Yes, Madonna.
So
we show them the stock certificates.
We would show them. Here's my wall of shame from 2008. So you got Citigroup, you got all the companies with the big bailouts. You got Lehman Brothers, Bear Stearns, they went under. Bank of America, AIG, Citi, Fannie Mae, Freddie, and the big Merrill Lynch. Back over here, I've actually got I got this stock certificate to my over there, And I
Couldn't
actually
figure out
bought
that.
that.
Hold on a second. Can we pause you for a second? You couldn't figure out left or right, so you just settled on over here.
Over there.
Either way, both ways. But I got one big stock certificate. I got them, and they were, Packard, the old cars. And GM was the only one in the group that hadn't declared bankruptcy. I framed that in like 2000, and sure enough, 2008 came, and then GM was also bankrupt. And I even have an Enron stock certificate, and even the White Star Lines. Don, do you know who the White Star Lines
Oh
are?
yeah, Titanic.
That's right. It's got a ship on it.
That's impressive.
So, yeah.
Speaking of Enron, you know what? What happened with Nikola? I actually had that on my things that I wanted to talk about. Nikola and GM and this Hindenburg Group report, real quick.
Hindenburg.
Well, yeah,
I know. It's like Titanic, Hindenburg. I got it.
Do you ever think they send out a positive report with the name Hindenburg?
Right.
Seriously.
Marketing.
I don't like. I get that a company has to report. Like the SEC is the enforcement tool for public companies. They have financials, they have a whole slew of reporting hoops they have to jump through to prove that they're being honest. I'm not saying that short selling firms can't uncover. Like who was right about Luckin Coffee? It was Muddy Waters, right? Was it Muddy Waters or Citron, Don? Or
Yeah,
both?
Muddy Waters. Yeah.
Muddy Waters. Yeah.
Yeah. Okay. So there's a validity to the work that these firms do. But man, like what happens if they're proven wrong? Like, so Hindenburg, Don, can you just summarize real quick what happened with Hindenburg and Nikola this week?
They, and then actually why it's down another 15%. So yesterday, Hindenburg basically put out a report saying that Nikola has totally hoodwinked GM into this partnership because they're basically smoke and mirrors and fraud. And then today, right. Muddy Waters said, we agree 100% with Hindenburg, and they put out a report too. So the stock is down. I mean, it was over 50, now it's 30.
Right.
Trevor Milton, the head guy at Nikola said he's retained counsel. If you're a company and somebody accuses you of fraud and you don't defend yourself, you probably should be defending yourself. So, I mean, good for him for doing that. And then I don't know where it goes from there, but
and it's weird. The timing's weird. They announced it right after like this report.
Right after GM, yeah.
Right after GM, like there's some really look. My first thought was who in GM leaked some things to Hindenburg? Like who? It's always about information. Like what's that show on Showtime where it's thought to be about Stevie Cohn? Is it Billions?
Yeah, Billions.
Billions. Like I feel like this is an episode of Billions in the making where there's someone inside of GM sending this group, like somebody from Hindenburg has. Now I'm all theorizing this. This is probably not true. Let me just say it's 99.93% not true. But you can see the episode writing itself, right, Danny? Where have you seen Billions?
Fictional narrative. Yep.
Yeah, this is fictional history. What do they call it? Historical fiction?
Historical.
That's a whole genre of books. My daughter reads, I like historical fiction. I'm like, well, if it's
it's on cable news every night too. So
Jesus, Donna, you can't suck me in today. It's fly eagles fly, man.
I can try.
That always on my toes. Historical fiction. So, this is like you can see someone from Hindenburg paying for information to somebody on the inside of GM to construct. Like, how else would they get these accusations? How else would the information come about? And the timing is just, we didn't know GM was going to really, do this deal, but we're going to short it after the stock pops and no one suspect. Like, it doesn't. There's something that doesn't add up here, either in Nikola's case or the Hindenburg report. But what happens, Don, if these are proven wrong? Like, what's going to happen to Hindenburg? In theory, it should ruin them, right? But it won't.
In theory, it should, yeah. Who was the news organization that ended up getting shut down when they were sued by Peter Thiel for just?
Oh God, was that BuzzFeed?
I think it was. He just basically owned them when they were finished and shut them down.
Yeah. I might have that wrong.
There
but
should
I
there
know
should be more of that. You can't just make stuff up and
Well, yeah. So they're retaining counsel. They're trying to defend themselves, but I mean, this is just the opposite of a pump and dump scheme where you're going long and then touting the stock and then dumping it after the pop.
right.
Here, you're selling short. You're shorting and dumping.
Yeah, well,
You're
I
shorting
just
and
there's
making
there's
the
just
stock
no.
go down.
The thing is, Danny, there's just no bar to this. Like at least with Nikola, who just reported earnings a little while ago. Look, we don't own Nikola, so there's a bar for earnings, right? You know, like there's compliance from either a Pete Maverick, a KPMG. There's an auditing firm out there that's audited the books and is signed off on the audit.
Right.
Like
Right.
there's hurdles in place. But when a Muddy Waters or a Hindenburg comes out, zero hurdles in place. And so it's
Well,
questionable.
yeah, but if they can demonstrate, meaning Nikola can demonstrate that the story has no basis in fact, and they can defend that and saying, look, this was a total scheme and it was a fraudulent story, they can be held liable. But it's a
But
tough,
it's just like Wells
really tough.
Fargo.
It's a low
Right.
bar a high bar to prove.
Yeah, but this is just like Wells Fargo, where you can find that to the kingdom come, Wells Fargo, but the shareholders don't get made whole. It's once again the
Well, yeah, I agree with
shareholders.
that.
Yeah, it's the shareholders who get hurt.
you know,
And
Tim, it gets back to what we were talking about this morning. The game teaches you the game.
oh yeah,
This is gonna happen to that's
Well,
a
how many
Jesse
times?
Livermore quote, and it's good. Things like this are gonna happen to shareholders. If you're gonna get involved in the stock market, you're gonna experience the highs and the lows,
Yeah.
the fraud and the gap ups, the gap downs, it's
The
just
upgrades
part
and the
of it.
downgrades, the
The updates
downgrades
and the
because they're folks just
downgrades, the muddy waters and the pump and dumps
it's just
and
interesting the way it's all ferreting out. And I wonder how many times I don't follow it this closely, even though I own Tesla again. I don't, how many times did this happen to Elon Musk during the journey? No, yeah, like that's
It's
I'm like,
ongoing. It's still happening, Tim.
yeah, but like how many I think Citron before Tesla went on this epic run or last year had something out where it wasn't good.
Yeah.
Yep. And so
people still think they're a total fraud, even though there's cars everywhere across the world with Tesla badges on them. It's not like they're producing
Bob Lutz,
vaporware or
yeah,
anything. You know, they've
Bob
got charging
Lutz, the
stations. They've
car
got
guy from GM. They should retire that dude's mind. Like he just all these angry Detroit grandpas about car manufacture, just upset about everything, leading people in the wrong direction to the point where GM had. Anyway, I could go on about Bob Lutz and his misguided thoughts about everything in life. Well, short selling. You want to do some short? Oh, Don.
it's baseball card time.
Here we go. Here we
No,
go.
this is better than baseball cards, Don.
Wallpaper
Even though
time.
it's based. No, even though it's based. Did you say it's reefer time, Danny? What did you
Wallpaper
say?
time.
I
Wallpaper.
thought you said it's reefer time. Like, what the hell are you doing at the office without me? By the way, I saw on trending on Twitter last night. I didn't read the story, but it was Jimmy Carter, Willie Nelson, and the Austin Torpedo. I'm not sure what the Austin Torpedo is, but I can only imagine.
Wow.
Jimmy Carter had a 90. How old is Jimmy Carter? Like 93?
Oh, he's like 94, 93. He's in
93,
up there.
94? Can you imagine like 93, 94 former president, still living, still very vibrant, having to defend himself against the Austin Torpedo with Willie Nelson? Like,
Yeah, Willie
man,
Nelson can hold his own. He's like 88, 80, something like that. He's pretty old.
yeah, that's right.
Still performing.
Willie Nelson has survived so much tax evasion, Austin torpedoes. Anyway, Don, I digress. I've digressed the whole show. Don, in this envelope was mailed to me, okay? Another mystery pack. Now, listen, for those of you that are not watching, but you're listening, you really should be watching. But I'll try to describe what's on this pack. Don, on the back of the envelope, the person who sent it to me, it's called Just the Hits. Just the hits. Like there's no junk in here. It's just the hits. But on the other side of this envelope, Don, the person wrote the Imperial Baseball Mystery Pack Series 1 2020. Imperial. What's better than Imperial?
Dun, 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 dun,
Yeah,
dun, dun, dun,
right,
dun.
right. Imperial. Like
I was thinking
this.
margarine, but Don went the other way with Star Wars.
Really, Danny? You were thinking shitty
Is
margarine?
Imperial margarine still around?
Imperial butter. No, Imperial. You said what's better than Imperial? Margarine. Imperial butter. You never mind. You guys, come on.
Jeez, really?
We get it, Dan. It just wasn't that good.
Yeah, like it.
I'm
You
thinking
get back
butter.
in the middle of your box.
I'm thinking butter. Don's thinking Star Wars, and Tim's thinking
Just get back in the
wallpaper.
middle of your box. You're leaning all over to the side again.
Danny, if you like,
You're
to
all
just,
over the
just take
place.
this,
I know. That
yeah,
was a
just
joke,
take
Don.
the you have in your hand to drive it through the heart of the show. Why don't you talk about bonds? Give us some of that good bond talk that you're good for. So I haven't opened it yet. Oh, are you guys there? I got a network
You're breaking
error.
up. Is that on my end or on your end? Are you hearing that, Dan?
You know what?
That's on his end.
I think we're fine now. We should be fine now. Let's do short seller. So you want to pay attention to this, Danny. This will probably make the notes for the show. Okay.
Okay, I got it. I'm there.
U.S. stock surged Wednesday, 5-month rally, yada yada yada. There's a gentleman, Christian Kamalaji, 32. He's 32, lives in Stockholm, and he trades tech stocks. Okay. So he's been trading full time for himself for nearly a decade, was keeping an eye on smaller, more volatile stocks for potential opening to short. He found one in late July in shares of Eastman Kodak, the company which for decades was a household name. So let's see here. The stock triples. Anyway, Kodak shares. So he shorted 45,000. He intended to short 45,000 shares a few hours in the July 29th trading session, but accidentally clicked the wrong button and shorted all of his 90,000 shares. So this guy shorted 90,000 shares in a stock that went on the triple. And if you remember Kodak's run at the end of July, it was frozen. They had to limit up the stock like 5 or 6 times. He decided, so he couldn't take the pain anymore. So he closed out his short after deciding he was unable to stomach the potential for further losses. The trade cost him 1.5 million.
Ouch.
So that part really hurts. Okay, like that really hurts. Like he could have closed it out right away. Oh, I made a mistake, closed out, but he thought the gods were on his side and decided to keep the short going instead of just realizing it was a mistake. And I want to point out something to stockners because there's a lot in here. Some of you do this. You make the mistake and then you think, well, that was what the world, and that's what the gods of trading intended for me to do. It's not true. The market's the last place you want to be optimistic. The market's the last place that you want to be opportunistic. Oh, I should just do that because that's what happened. If you made a mistake, just close out the trade. If the trade's not working, just close it out and move on. So it was the dumbest thing of his life. But here's the thing. If he had just held on to his shares, he would have had a huge payday. Kodak shares fell more than 50% in subsequent trading sessions and are down 80% from their July 29th high. So not only did he close it out when he couldn't take the pain anymore, he actually would have doubled his money on the way down. That's a bad day. Danny, are you still with us, or you blink, Danny?
That's unfortunate.
I'm here. I was thinking,
Yeah.
when you said that when he first realized it and did it, and it started going against him a little bit, he decided to go ahead and stay the course. It reminds me of the adage we always talk about. It's okay to be wrong. It's not okay to stay wrong. His first mistake was, staying with it when he knew it wasn't what was the outcome.
Right. Well, that brings me to, I don't know why I can't bring you guys up here. I cannot bring there. For some reason, there we go. The cameras will stay with me now. That brings me to the next thing I want to talk about. So we've talked ad nauseum about diversity. By the way, stockers, we're going to get into all the things that we bought this week, things that we sold, giving an update on the portfolios, and we'll run the screens. So, and then I'll give you the one thing I think you really need to be paying attention to. I think the market hinges on this one thing. And so what I'm going to do in a few minutes. No, you think I'm joking, but I'm not.
Wow.
Like it's only one metric, but it's a very important metric right now. And when I say one thing, like, is the market going to fall apart? It could on this one piece of datum that I'm going to introduce. Thanks, Don. That I'm going to introduce to you here in a few moments. But I saw this in the journal the other day. And so this fellow wrote a piece on diversification. And Don and I and Danny have had extensive discussions. Like, our morning call is every morning, 7:45.
8:45 Eastern.
Oh, 8:45 Eastern, thank you. And oftentimes it centers around why. It's not like we just have this call, it's not a self-affirmation call going, diversification sucks. No, it usually centers around a conversation that Danny or Don has had with someone, or maybe I've had on Twitter with someone, about either lower fees, like I'm in a Vanguard mutual fund pie chart because the fees are low. And it always comes back to what are you costing yourself by missing out on some of this opportunity? And the market's not always opportunity. That's the thing that we always talk about. Like, you need rules to get out of the market's way and protect your capital, but you also need rules that get you back in. And so, like, we'll be talking about the opportunity cost of lower fees and just being in ETFs or mutual funds. And we've done that. But this fellow wrote a column, I guess, last month, about the powers of diversification, how great being diversified in your portfolio truly is. And Don has some really strong thoughts on this that I'm going to ping him for.
They don't ever write those articles at the bottom, do they?
No. And so here's the problem about diversification and the way that this article, let me just read you the first instance of this. So last month, I offered readers a view into the virtues of diversified investing, the idea of spreading your money across different kinds of investments so as to reduce a portfolio's risk without reducing expected returns. That first paragraph holds so much trouble for me. First off, expected returns. If Danny would let me give the middle finger to this person on the camera, I would, but Danny would cringe and then he'd be like, stop giving the finger on camera. So I will not give the middle finger, Danny, on camera.
Thank you, Tim.
But just know I'm saying F you to that. Is that better?
No, much better. Yeah,
Thanks,
that's fantastic.
Oh, thank you, Don. I appreciate that.
That was also sarcasm, Tim, which you sometimes have a term issue picking up.
Sarcasm's my
I'm getting a producer pretty soon, so we can just edit those pieces out.
So expected return is the worst phrase you could ever. I mean, people will approach us all the time going, hey, what can I expect in regards to returns? It's a horrible phrase, because in a down market, it's the market, anything can happen. And so if the market's down and the market's down 30% and we're down 0, or we're up 1 or 2, well,
or even down 8.
Yeah. I don't think anyone's going to go, I think we expect to in the next 5 years return 1%. Like, no one's going to tell you that. But the reality is the market might do that. And what I'm getting at is you're not in control of the market. You're in control of how you approach the market every day. And therein lies a huge subtlety in language, but a world of difference. I have an expected return. Well, you know what? I wanted to be 6'5" and a middle linebacker for the Eagles, but I'm stuck here with these two guys wearing a Fly Eagles fly shirt. I had expected height, but it turns out my mom married a shorter man. Who knew? And so here we are.
You damn father.
Sperm. It's a market. Anything can happen. And so to say you have, like, I was asked on Twitter a couple weeks ago, what can I expect? And I'm thinking, I know what you're getting after here, but it's the absolutely, you know what, I should just read it, but it's absolutely positively the wrong question. I said, what was the market willing to give you? What are you willing to do to protect your wealth? And so this guy goes on to say, in regards to expected return, reducing portfolios risk. Diversification does not reduce risk. One of the biggest underperforming that you think would be diversified, emerging markets, utilities, not doing well. And let me tell you something, that's not reducing your risk, it's actually increasing your risk because you're in underperforming assets. The only way to reduce your risk is to be in cash or have what's known as a cash drag. But because, Danny, now I'm on the soapbox, I'm on the sermon, I'm on the mountain high here. But because you have been conditioned by the horrible marketing of Edward Jones, Raymond James, the pirate ship with Tom Brady, and Leonard Fournette now done. And so just, I mean, honest to God, just fire a cannon and Raymond F. and James, just put them under because their strategies are horrible. I'm allowed to have that opinion. And so here, this diversified approach is not reducing your risk, it's increasing your risk because you're now subjecting yourself to the worst. You're like, you know what? I have a grocery budget. I can only spend $100 and my family needs meat. I'm going to mix in some good beef, but there's some questionable chicken that they have on sale. It may or may not have salmonella. I may or may not poison my family. But you know what? I'm going to diversify my grocery budget with questionable meat so I can make it go farther. I'm reducing my risk.
Just put some bleach on it. You're good. That's what Food Lion used to do.
Jesus, Don, how do you manage? If I said Santa Claus, you got something negative to say up there?
Is Food Lion still around?
Oh,
I
yeah.
think so. It's a gift. Don's gift is this, unfortunately, for some moments in my life.
Among other
Well, I'd like to make a couple comments on that. So they're saying that all this different asset groups, diversification lowers your risk.
Yeah.
And that's true if you're going to be 100% all in all the time, and especially with concentrated positions. Hang on. They think you're just going to, instead of having different assets, you're going to have one or two stocks. Okay. So you want just enough diversification when it's going up in a decent market, 12 stocks, a few ETFs, that's it. Not every asset class. You're right, because some are not weak, but when it goes down, all the correlations grow together, it goes down together, then you need cash. Then you don't want diversification, but you want cash.
Right. I'm with you. By the way, folks, if you haven't figured out, we really don't talk about the show before it happens. Who's got the outlook going?
That's Don dinging.
Oh, you're really going to throw him under the bus, are you?
Yeah.
Those are my alerts.
Those are your alerts. Well, that's pretty good. You've only heard one or two. You really got to get nervous when you hear like 10, 12 will go off at once.
I think that's what they call foreshadowing, Danny, in the entertainment industry. It's coming. So that what you just touched on. I was getting to that point, Danny. So many of you stock nerds, I'm looking right at you when I say this. So many of you want all of the gains and none of the risk. And I want you to just let that soak into your soul. Look in the mirror and go, I want all of the gains and none of the risk of the market. That's like saying I'm going to step into a knife fight and not get cut. I'm going to approach Thanos. By the way, the movies are getting better. I love those Marvel movies. Who knew I shunned them for so many years and now I really like them? You guys got to watch them.
Yeah, but you also like All-Star Wrestling, so we got to take it with a grain of salt.
It's WW. You know what?
He bit, Don. He bit.
I did.
Yeah,
I did. Got something to say about that? Like a little bleach in the ring, Don?
Well, just don't tell me you're watching Cuties.
The hell's that?
Oh gosh,
man.
don't go
Come
down the
on,
rabbit hole.
Tim.
Let's just move on. Let's move on.
Is that another wrestling series?
Netflix is getting a
Whoa,
lot of
Danny
heat.
knows about this?
Yeah. Netflix is getting a lot of heat because they're kind of sensationalizing and sexualizing teenage girls.
Not teenage, 11.
Wait. This isn't wrestling talk anymore.
No,
I thought Cuties was a.
I hope not.
No. Oh Jesus, Don! How do you do this?
I told you, man.
Time?
You bit. Well, you wanted to not. Yeah, just don't even bite.
No, I don't want to know any of this. I thought it was a wrestler. I thought it was like the fabulous Mulan, Wendy Richter from the 1980s in pro wrestling. No,
nope.
I thought
nope.
Captain Lou Albano.
Yeah. My brother was Big Lou and I was Little Lou. Listen, I wore husky jeans.
Only about 5% of the people know who you're talking about. Anyway, move on.
That's not true. That is zero not true. By the way, when you start 7th grade at 168 pounds and end 12th grade at 168 pounds, you're doing something.
Wow. You weighed
Oh,
168 when you were in 7th grade?
look, I'm pretty sure. Like I wore what they know were I don't. Do they even
Big
make
jeans,
husky
big
jeans?
jeans.
Yeah, but they must have a more nice name for them. Like, when I was smaller and like, I mean, like this body frame was playing offensive line. Uh, uh, yeah, like they called them husky. Like I could never wear the normal
Huskies, that's
jeans.
right. Husky jeans.
Yeah, yeah. Like my mom had to go to the husky jeans section and she tried to play it off as if it was normal. Not normal. No, no, I was a big boy.
Not Tiny Tim, huh?
No, 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 not anywhere tiny.
I weighed 98 pounds as a freshman in high school. That wasn't easy
98
either.
pounds. Where did you live
I
in
was
night?
4'11", 98 pounds as a freshman in high
That's
school.
interesting. Are you a Jacksonvilleite your whole life?
No. That's from Jim Thorpe, Pennsylvania.
Oh, how'd you end up in Jacksonville? I've never asked you this. Jim
College
Thorpe,
job.
That's
Graduated from
great.
college.
greatest athlete ever, Jim Thorpe.
Absolutely.
Oh,
Yeah,
yeah.
Jim
Oh,
Thorpe. I
yeah.
saw him play,
Yep.
Danny.
No, Tim, but when you win the Olympics in track and field, high jump, football star, but I mean, whatever you did,
And he played
Oh,
him in
so
tennis.
good. Where'd you go to school, Don? God, I don't know you. I feel like I don't know you, Don. Tell
Well,
me where you went to.
my biography's only been on the website for 5 years. I can't understand why you would
come on,
know
wake up,
anything.
Tim.
Working on
Here's
it.
a little fact. Did you know
What?
that Jim Thorpe was the very first president of the NFL? He was the figurehead because he was so famous. My former partner, who's deceased now, Dan Kofal's father, Don Kofal, was the vice president with the business acumen that actually ran the NFL. He was the vice president of the
I remember.
NFL.
I remember. I
Yeah,
remember Don.
He had Dan when he was 62 years old.
Oh, jeez.
Yeah, Dan, my former partner could have still gotten World War II survivor benefits when he died. He didn't do it, but he
You
could
just
have.
never know where the show's going because you look through the notes.
You
I'm
don't. You
planning it.
never know.
No. Like we touched on sperm earlier. Then Danny circled it back. Way to go. And more importantly, Don, where'd you go to college?
DeVry, Columbus.
Columbus?
DeVry Institute of Technology in Columbus, Ohio.
Then how'd you end up in Jacksonville?
IT background, Tim, in case you didn't know.
IT back. This was back when DeVry was not a joke. Now it's a punchline.
It's a joke now?
And then I got hired by Barnett Banks out of college and
Barnett
moved to Jacksonville, Florida.
Just packed up and went.
That's what you do when you graduate and need a job.
Man, how long have you been in Jacksonville? I feel like I should.
1986, I moved down to Florida.
Wow, what car did you drive down there?
A Chevy Nova with no air conditioning and the seatbelts cut out. But I
For
upgraded
safety?
pretty quickly to a Nissan Maxima, and then a Camaro, and then a Chevy S10, and then the minivans came.
What do you?
We know where that's going. He's bringing it back around, Tim.
I had an 87 Pontiac Grand Am SE two-door coupe. That was my first car. I saved up $5,000 from Barnett's garage. Let me tell you something. That thing was electric blue with blue wheels, blue interior. If you Google the 1987,
Electric blue with blue wheels,
you know what?
and blue interior.
Oh my gosh, this car
Did
was
it have
beautiful.
curb feelers on it?
At 167 pounds.
No, I used to wax this.
Pure sexy.
I'm trying to picture blue rims. What did those? Where did you get those? Were they spray painted? Was that to match the body color? And what color is electric blue actually? And what color is electric blue? Is it like a royal blue or a navy blue?
No, this is not
blue?
it. Images. 87 Pontiac Grand Am. Mine was like this, but blue with blue wheels. None
Down
of
to
you.
the
Oh,
left.
right here.
Down to the left, right
This
there.
is my car. Imagine though this with blue wheels. So you see the color. It had the. Oh, I had that. That's the SE badge to let you know special edition. It had ground effects, Rex and effects.
It's special, all right.
This car, Don, had like a Knight Rider computer in it. Like you would hit it and it would do. It was totally 1987s, like what they thought the future would look like. and you would press it and it would do a systems check. It was the best.
Was it that same voice from Knight Rider, that female voice that does
No
the check?
voice. It would just go through the whole circuitry.
I see.
What a light show. It was like diversification. It was just a freaking light show. Here, my door's open. No, your doors aren't open. Okay, great. But loved that car. I had that car, Danny, all the way through my career in the Marine Corps. I only got rid of it in 08. That was my first car that I bought when 1992.
Wow.
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 Had it all the way through 08. I love that car. The blue Bomber is what she was known as.
She, huh?
Yeah, you had to name it. Yeah, Blue Bomber. Best $5,000 I may have ever spent. All right, so look, I'm going to not do any more of this because there's a lot of reader comments, but there is. I'll do one more. because it really illustrates the problem.
Because one is the new none.
Yes. So this guy admits, judging from readers' reactions, it seems I haven't convinced everybody about why diversification is so great. Danny was alluding to this too in his retort to this article, that why are you staying static? Like, this portfolio assumes that you make, and I'm not talking about rebalancing. Rebalancing's for, can we get a shirt that says rebalancing's for losers? Thanks,
You
Danny.
can.
But like that they think that's adjusting the portfolio. Like that's not adjusting the portfolio. Once a year, rebalancing isn't doing anything. You're not reducing your risk. Your risk is reduced when you have a rule that gets you in and gets you out of stocks, ETFs, mutual funds, what have you. And it's not over trading. It's protecting your wealth. What do you always say, Don, about making money?
I say a lot of things about it.
It's the
which one are you thinking about?
It's really good.
Yeah, making money is the easy part. Keeping it's the hard part. The only way you keep your gains is if you sell. Now, which is a paradox, right? Because someone on the other end of this microphone and camera is going, yeah, no kidding, Tim. Well, how do you keep your gains and make more gains if you're out of the market? You're not out of the market forever. You're using the velocity of money to harvest gains, and then you're using entry rules to get back in. Well, I've been told that that's awfully dangerous. No. You staying in the market 100% of the time, trying to get 100% of what the S&P returns, is the absolute most asinine thing you could be doing. There are just times you.
It's also kind of funny, ironic, Tim, because flip that around. Remember, they always say, Wall Street says, it's not a loss until you sell, right? But on the flip side, when it goes up, it's a gain. You're right. It's not a gain until you sell, right? You can't have it both ways. In other words, they're saying.
I always, like, we give away all of our strategies for free, stock nerds and market lovers. You know that. I'm going to show you the screens here in a moment that you can work from. Don's going to allude to the 21/21 that you can build a watch list from. We do everything. We're so transparent about what we do because we're here to empower individual investors. But let me tell you something. Some investors are just dumb.
Ouch.
Like, I always come out on the side of us, like the individual investors fighting against the machine of Wall Street. But some investors are just dumb, and it's not their fault because of the way they're marketed to. So listen to this. A reader writes back to the author.
They're programmed that way.
Yeah. A reader wrote back, it's this Stockholm syndrome, Danny. I'm not even sure.
That's a good one. I like that. I like that analogy.
Yeah. Diversification. Listen to this nonsense, Daniel. Don, you can just look stoic looking at your screens. Diversification will, of course.
A lot going on.
Yes, there is. Diversification. I'm trying to read.
We know it's tough, Tim.
Well,
put it on a teleprompter.
Not going to do it. No, Don, you're not going to do it.
Don't buy.
Diversification, of course. Listen to this nonsense. Listen to this sentence, Danny. Diversification, of course, mitigates the losses from your bad picks. No, it doesn't. There's an investor out there in investor land that thinks diversification mitigates the losses from your bad picks.
Well, the question is, why don't you mitigate the bad picks real quick? Call them real quick and keep your losses small and not let them turn into bigger losses.
Don't buy the bleached chicken.
Yeah, don't buy the bleached chicken. There you go. The bleached chicken. That's what
But
we ought to
it's
have on a shirt. The bleach, don't
diversification
get the
will
bleached
strictly
chicken.
limit your rewards from the good picks. I don't even know where to start with this. Like
It's written by an academic. I mean, it had to been.
that's what I'm thinking too. Let's see here. A reader advocated
Don't
for
get the
beating the
bleached
market
chicken in
with
your portfolio. That's pretty good.
a reader advocated beating the market with undiversified portfolios by acquiring investment skills to avoid losses from bad investment picks. Hold on. It's vital to know investing and finances language. Learn how to read a financial statement. Learning how to read a financial statement will in no way, shape, or form help you pick stocks. Just let that sink in. This is why economists make bad stock pickers. This is why accountants, Danny, make bad stock pickers. This is why you don't hear about the good financial planner who's also really good at identifying the equities that have the ability to go up in price before they make the biggest price moves, because they can't do it because they're looking at financial statements. You want to tell them the Kofal story of how he told us to buy Ford because they had free cash flow?
Well, the other thing he always said was Amazon's not profitable yet. I said, yeah, but they're stealing market share. Pretty soon they'll just raise prices by nickel. They'll be profitable. Oh, anybody can open up a website.
Now someone's going to take that statement.
He's a great economist, but you're right.
Learning how to read a financial statement, they're going to take that and they're going to say that, well, what are you picking your stocks on? They're going to butcherize my statement. Butcherize is a word, right, Danny?
Butcherize, no.
You know what? It's not, but it gets the point across.
We get your drift.
So you can read, if you can do what I'm about to describe, read all the S1s you want. Read all the financial statements you want. Okay? K1s, S1, read them all. You have to identify what makes a stock have the propensity to want to go higher. Is it free cash flow? No, it's not. Is it an acceleration of sales greater than, say, 25% year over year, quarter after quarter for the last 3 years? Oh, okay, great. Then you've identified.
Yes, to clarify, that's a yes.
Yeah. So you can read your financial statements all you want, but if you can't identify the commonality between some of the greatest winning stocks of all times, or if you can't read financial statements to actually figure out the commonality between the stocks right before they make their biggest price moves, you are wasting your time, my friend. I can't begin to tell you how in academia they try to teach you this, and it's absolutely the wrong approach. You'll miss out on the bigger moves. And then what you get are more academics coming and going, and that's why we just buy the S&P 500. You've got to have 495 stocks to get the 5 good ones. You don't have to do that. You need a screening process. And so I think that's the best transition I can make to.
Let me put my Tim Turpin on just real quick. So what's Tim saying is there's only really a few fundamental metrics that really count, that really are important, not the whole scheme. And then once you get those and you screen and you get those companies that have those few metrics, then you look at them on a chart to see which ones have the highest probability of or timely at right now. Because just because they're a good company doesn't mean they're a good stock. They're timely at the moment.
Our approach is 70% fundamental, about 30% technical. So we're looking for the fundamental facts that we know give the stock the propensity to move higher. From there, then we screen it down even more, and we're looking for the supply and demand on a chart, or if you don't understand, when I say chart patterns and consolidation, stock nerds, all these years with you, I'm talking about supply and demand. I'm looking for situations where there's nobody selling, where there's enough supply there's enough demand to outmatch supply and get that stock to move higher. It doesn't always merit out because it's a market and anything can happen. That's why you need sell rules, because you're going to be wrong. And you have to be okay with being wrong. You just have to take the only way to mitigate the risk of being wrong in your stock picks is to have is to try to keep your losses to single digits and then use position sizing as your weapon. For some of you with your 25 and 50% stock positions, which maybe, Don, they should have rebalanced with these large stock positions. I tried to work that back in there. You're absolutely positively taking a hit right now. And there's no guarantees it'll come back. And it doesn't mean that Amazon's going out of business. It doesn't mean Netflix is going out. No one thinks that. But when a stock decreases 30, 40% from its highs, and your position is 25% or greater, there ain't enough covered calls you can write to mitigate that risk. And so you have to be willing to sell. And sometimes that means taking a loss. But let's show you the screening process. So a lot of you, so Don, we're going to show the screening process so we can only pick the good stocks. You diversify because, you know, the diversification is an insulation against your bad stock picks. No, it's not. The fact that somebody thinks that means that, Danny, we have a mission to reach every investor in this country. The fact that somebody thinks that means that the stock nerds and market lovers that have been watching this for years go share our work with people, please. The more people we do, the less people get hurt by Edward Jones or Raymond James. Danny, we got to tell the Edward Jones story. Give me a second, though. Don, do you want to do the stocks under $10 screen? Seems like you do.
Let's run it like 3 or 4 times while I go to the bathroom.
Was that sarcasm?
That was. Hey, you know, speaking of, you know, selling the losers, you know what the relative strength of the equal weight S&P 500 is?
Oh, give me.
It's a 61. That means that it has outperformed 60% of the stocks in the market. So automatically, 60% of everything in there is underperforming the RSP. You know what it is on the SPY, which is market cap weighted? 73. That means 73. It's outperforming 73% of the stocks in there. So if you just want to be with the average and picking stocks, you better be selling 73% of those losers and focusing on the 27% of the winners. It's not just, I'll sell this one, I'll sell this one. You just need to bat about 500, cut your losers and keep your winners running, and that's how you outperform the market.
Yep. So let's do some screening real quick as we talk about different stocks. So this is the screen here. Look, by the way, only one stock's appearing right now. Just pause the video, take a look at, let me get this out of here. This is, I show you free tools. This is FinViz. I've used this screen forever. It's not my only source, but it's a free source for you. And so you can see all the metrics that you can identify stocks before they make their biggest price moves. It doesn't mean they will. It just, and by the way, some of you will complain, Tim, it's one stock. I want you to limit your input. It doesn't, you're going to have to be okay with missing some trades. When you go swimming, the analogy I like to use, when you go swimming and it's fun, you're having a good time in the lake, the pool with your kids, whatever, you don't get mad because you didn't touch all the water. You can't touch all the stocks. Every day there's a mountain of stocks that go up and a mountain of stocks that go down. You can't be in all the stocks. And screening you need a system, you need rules, not willy-nilly. And so I got EPAM. Let's take a look at the chart real quick, the mini chart that should pop up here. Is EPAM on any of your list, Don? Oh, it's not too bad.
Not really.
No. But look at that, above the 21. It's got all the fundamental. That's a stock.
The problem is the average daily volume is only 300,000 on it, although it's only traded 90,000 today. But it is a $316 stock. Yeah. But I just don't like low volume like that. They should split.
They should split?
They should split.
That's not sarcasm?
No, that's not sarcasm. If they want to get on my screen, they better split.
We need double the daily volume. Do it, Don.
Let me tease it out of Don a little bit more. As a professional broadcaster, Danny, this is what a teammate does to help their partner when they're not taking the hint. Don, could you explain for the listeners why they should split?
Well, if they split
why?
3 to 1, then their average daily volume would be 900,000 shares a day.
Okay.
That's a lot more liquid than.
And why does volume matter to you, whereas maybe just one person out in investor land will be like, well, that's plenty of volume for me.
Because if you need to sell, there better be ready buyers, or you're going to really impact the price of the stock as you're exiting.
The bid ask. So let's take a look at the bid ask is what I was getting to. So this is actually for the volume. This is actually not a bad bid ask for that size stock. So notice trading at 316.97, but the bid is 316.13 and the ask is 316.78. I've seen much worse than this, but that's still
That's a widespread.
that's a widespread is what they call. And so if you look at something like Apple.
So on that, you'd want to use a limit order when you put it in.
Right. And so with Apple here, 111.86, 111.87, you can see how it's so much more incredibly tight in terms of the bid ask. And so, Don, what's the other reason why you like higher? What's the volume that you're looking for as a portfolio manager?
I really like about $30 million in daily dollar volume and trading about 800,000 shares a day or better.
And that's because of the amount of shares that we're trading, Stock Nerds. It has everything to do with our size. Even though like Don might take a 2.5% size position, a 5% position, a 7% position, it has everything to do with the amount that we're trading. Did I explain that well?
Yeah.
Yeah, I think so.
Yeah, and even though he may only take a 2.5% position, that may be the first half. He may add more, and so he's got to look down the road. So once he's get at 5, he wants to make sure he's got liquid enough to get out quickly.
Yep. And so let's do dividend growth here as we. Oh, you know what I didn't do, Danny? Let's do div growth, and then we'll do 21/21, and then I did not introduce how people can get a hold of us. So let's see here. This is the dividend yielding over 2%, price above the 20 SMA, price is above $10. And so here is one main. OMF is interesting. That chart at OMF. What's the volume on OMF, Don? That's not a bad pattern at all for this market. It's below the 200 day.
941,000 shares, and it's a $30 stock. So this would be like right around the limit of what I would consider buying.
Look at XER, EXR, pardon me. Look at that. That's been showing up on this list a lot since we introduced the div growth. This has been on every week, and I didn't take it. I should have taken my own medicine there. MDC, what does this chart look like? MDC, PG, and then there's your favorite sporting goods store, Danny. Can you see it?
Yep. Mm-hmm.
Yeah, you like that one?
No. Good chart though. Nice looking chart. Oh, there it is.
That's not a bad looking chart. PG's on the list there too. That's not a bad looking chart either. And so we'll delve into here in a few minutes. Look at this market just pulling back. Continues to be weak and choppy. We'll see how the afternoon session goes. But this is all predicated. Let me show you this. We'll do the admin stuff and then the 21/21 next. But this is, Danny, that piece of datum I was talking about earlier.
Yep.
It's this. It's the dollar. Like the dollar is such a big deal here that you can see how it's continuing to find support here, even though it's down right now. It was up earlier. You can see it's really at the top of the range. You need this dollar to break lower. You can see if I do the correlation between, say, 9.1, you can see 9.1, 8.31. Look at the dollars move higher here, and then look at what we'll just put S&P up here, SPY. So from 9.1 goes up one more day, and then the market starts to break, and it's really has everything to do with the dollar's rise. And the dollar going higher changes the entire dynamic of this market. And I don't know, it might sound ludicrous to say out loud, is the Fed going to do something here or step in here? If the dollar were to go just start going on a rip higher, I think they would, because it would potentially destroy the market. Danny, can you explain that relationship between the dollar and the stocks?
Well, yeah.
in simple terms.
Well, theoretically, a strong dollar, especially for large cap companies, S&P type companies, makes things more expensive, especially exports overseas. So big multinational companies, that puts pressure on consumers, especially international consumers. So a strong dollar in the short term, now in the long term, a strong currency is actually good for the economy, despite most economists don't have that, believe that. But the bottom line is it's bad for stocks, and it's normally decent or good for bonds. And just like the yen, you're talking about the yen, a strong yen, it unwinds the carry trade. So when the yen gets stronger, that's bad for stocks as well. So a weak yen and a weak dollar is good for stocks.
So it'll be interesting to see how this all fares out. And you'll notice that, like,
well, you can only have a weak yen and a weak dollar if you've got a very strong euro.
Well, yes, and a few other currencies, but primarily the euro, yes.
And so we've touched on this before, stock nerds, but I think it merits saying again, the VIX is one of the worst places you can hedge your portfolio. If you're trying to hedge, this is the VIX, these are the VIX futures on a daily chart, and they've come off their highs. So you've got markets that are choppy to coming lower, and the VIX, if you're like, well, I'm going to hedge in a product like VXX, or I'm going to buy VIX futures, this is not a very good product. And you can see, look at the VIX down again today. The VIX is down almost 7% here today. And this is the purple candle is the S&P. The bars are the VIX on my chart. These are just Bollinger Bands. And you can see you do 1, 2, 3, 4 dances above the Bollinger Band, and then you start to break. And so if you're trying to hedge your portfolio with VIX, or you're trying to gauge where markets are headed based on VIX levels, I think you're playing a fool's game. And I hear people all the time say VIX at a certain level is concerning. And is it? What makes VIX at 30 more concerning than VIX at 25? Is VIX at 15 complacent? Like, what is the precedent for saying those numbers? I mean, I'll go even further. You could probably do the history of the correlation and say, okay, well, now match that against pandemic, and then match that against the greatest release of stimulus in the history of this country in terms of economic stimulus given to just about everybody. I don't know if the VIX is irrelevant, but the VIX appears to me to be a hindsight trading tool. And so what you want to be able to do is identify points in time that want to get you out of the markets, that want to get you out of the way of the markets. I don't know if we're there yet. We've got a market right now. Like, if we look at it, we'll use the ETFs. This is a big deal. You're at this. I'll show you what lines are on my chart here. The purple line's a 5. The green is an 8. The pink is a 21. The blue is a 34, and the red is a 50-day. You got to really hold these lows from, what is that, Tuesday, Don? And you got to hold Tuesday's lows here if you're the NASDAQ. It's a big deal. You're starting to come in to where you're hitting resistance at these upper moving averages, and you're finding no buyers right now. That's a big deal. SPY looks better, but it's chopping around the 50-day. The Dow is holding the 34, and the IWM is below the 50-day. This is not calling for a crash by no means, or a March type sell-off, but it's definite risk in the market, and you want to have your position size under control. But Don, you got anything to say about the indices right here?
Yeah, we broke the 50-day on the Qs, and you're like less than you're just a fraction of a percent away from breaking Tuesday's lows.
Yeah, and so it's a really, really big deal. And then, which is a really good, interesting point that merits no fact base on my part, but let me give you the rest of the show here. After I do the admin here, Danny, we're going to do Don's 21 over 21. We'll talk about that, how that list is evolving. I got some stock moves I did. We'll get Don's stock moves, and then we'll do the admin, Danny, and end the show. What do you think? Sound good?
I think let's do it.
Okay, so real quick, stockers, market lovers, look, we cover a lot of territory. If you're new to the show, it probably takes 4 weeks of listening to what we're saying to get what we're doing and how we look at markets. Because anyone, if you're looking at a chart, anyone can talk about the left side of the chart. It's where is price going on the right side of the chart, and talking about containing your risk and what's the edge in that. And so if you like what we're doing here, or you're like, I don't really get it, the best thing you can do if you're not doing it is watching we put nightly videos out. We're the most transparent firm in America. There's no one doing what we're doing in regards to showing you what we're doing. And then especially if we take losses, we always document that so clearly up front, because we want you to have the courage of your convictions to do that. The podcast, what you're watching, gets posted here Saturday mornings. If you're in the know, you know that this video podcast will show up in the Daily Market Insight Friday afternoons. And then let's do the contact us page here. So if you want to get a hold of us, look, you can email any one of us here. But honestly, Danny has been so busy with Stock Nerds and Market Lovers since March, just going over just all the stuff that we talk about cumulatively, like how your pie chart is underperforming, how you deserve better than a quarterly review. Like Don and I are reviewing the portfolios all day, every day. What you're not getting that at the pirate ship with Tom Brady. You're not getting that in the empty Edward Jones dome, Danny. Just vapid, just like the firm, vapid. And you're not getting that with Morgan Stanley, which, I mean, we all know, Danny, about the Morgan Stanley branch in Wyomissing, Pennsylvania, right?
Yes.
Have you walked your dog over there to do its business?
No.
No, you've got 2 dogs, Danny. I mean, you could do twice the damage.
I'm not going clear up there.
Okay, well, you could drive. Makes a nice road trip. Oh, okay. Awful people up there.
But if I go up there, I'm going to see the gym where Jim Thorpe grew up.
Way to circle that back. So listen, don't sit and wonder. Just call us, 855-732-5932. We'd love to hear from you. And then I'm going to tell you that the easiest way to get a hold of us is on Twitter. And so if you want to get a hold of me, it's at TJ Razor. And I say that because my inbox fills up. I don't give out my phone number anymore. And you just have to let me know that you followed me. I'll follow you back. And then you can direct message me, which reminds me, our mutual friend, Mark, I have not replied to him. He wrote to me. I've got it. Mark, I'm sorry. I know you're listening. You'll get tweets. And then I do have some thoughts on 9/11. Today's 9/11 as we're taping this show. And I wrote them here. And I have a theory that markets don't sell off on 9/11. They might chop around, but we'll see. We're putting that to the test here, that that we don't let the terrorists win on 9/11. And so that's a whole nother story. You get Don Vandenborg here. Where's Don at? D Vandenborg on Twitter. And then here's Don. You want to explain this tweet here, Don? This 403B tweet?
Oh, man. Teachers just get absolutely screwed by their teachers unions and not being subject to ERISA, that they just can pick from mutual funds, and primarily they get put into annuity companies. And it's just the last word that he says there, disgusting. It's just, it's time for some sort of a reform in that, man. It's just bad.
Yeah, it's not the teacher's fault. They don't know. Danny, what do you have to say?
Well, I said annuities. The only thing you can own in a 403B are mutual funds and annuities. And so what a lot of these teachers do, because the only person showing up for the dog and pony show are the insurance companies. And so they actually direct you to go into an annuity and then into Vanguard or into a fund. When you can go directly into that mutual fund itself, you're paying the insurance company an extra 2.5% a year on average for nothing. It's unethical.
Annuities are insurance, Danny. They're not investments.
Yes, yeah. But when you don't need, look, you don't need an annuity inside of an IRA or a 403B or a 401k. You don't need annuities inside retirement plans. It's already tax deferred. You can literally construct almost, well, in a 403B you can't, because they limit you and they don't let you do stuff. But inside an IRA, you could create anything you can do inside an annuity without paying an extra 2.5%. About the only time I would recommend an annuity, and I cringe when I even say this, is if you are a cardiologist or a heart surgeon and you got a bullseye on your forehead and you've already maxed out your 401k and your homestead, and you're more worried about getting your money back than return of your principal.
Where does the phraseology, you got a bullseye? Why would a cardiologist have a bullseye on his or her forehead?
Liability, high liability. Now, if you
High
got really
liability,
good, if you have really good medical insurance, malpractice, you're probably okay. So that's why I'm saying it's overkill. But in my opinion, the only time you could ever make an argument for an annuity would be to asset protect the assets, because they're like a 401k or IRA. They're pretty strong against creditors if you put the money in before you create the liability. You can't do something and then stick it in afterward.
But they don't give the returns. Like, that's the thing.
Well, yeah, that's what I'm saying. You're just worried about getting your money back. You're not worried about the return. Exactly.
What does max out your homestead mean? That was a phrase that you just used.
So like in Texas, you can declare, this is my homestead, this is my home, and creditors, you're protected from that. Creditors can't, up to a limit. Creditors can't come after that. Now, that's not the same in Oklahoma. Oklahoma, they can come foreclose on your home too. It's different in each state. But in some states, your homestead is protected.
Don, I just imagine Michael Scott walking out of the Dunder Mifflin building in Scranton declaring that this is his home. It's now homesteaded.
Yeah, well, that's what building. The two Enron guys knew that they were getting in trouble, and they built they bought these huge monstrosity homes for millions and millions of dollars, and they tried to homestead it. I can't remember what the judge said. He might have said, yeah, that's a little too much. So they put limits on it, but it's still pretty, anyway.
I'll tell you, it's amazing to me how many people, Danny, you've been able to help. This isn't, look, Dan isn't going to say this, but I listened for so long, Danny's conversations with people, and it always centered around insurance. You guys sometimes wonder why I come down so hard on insurance, because the opportunity lost by you being in an annuity that is returning, you were promised 7% expected return, Danny. That's how they market to you, expected return. You were promised 7, but you could never lose, but you're only getting 3, and you're like, what the hell? I'm only getting 3. Why is that? It's the way the product is structured. Or you were sold life insurance as an investment.
Absolutely.
And it's not an investment, and I don't think it's the stock nerds that watch. I think it's the loved ones of the stock nerds and market lovers that have been subjected to this malfeasance by these insurance salesmen. And it's like I say this out loud, but you wouldn't go to State Farm to find the stocks that have the best chance of going up in price. You go to State Farm for a discount double check from Aaron Rodgers.
Although State Farm has mutual funds.
That's what I mean.
Of course, they white label them. They're done by somebody else, but that's the story.
But hey, I'm here at McDonald's. Can you guys do a portfolio evaluation for me? Sir, this is the home of chicken nuggets. Oh, okay. Like, this is Don, I'll put it in Florida terms. Sir, this is a Rally's.
They're not that popular here.
No?
They maybe in Central Florida.
Oh, what you got? What's regional to you there? Checkers?
There's a couple of them, but it's not something that you really think about. A lot of Sonics around here, and then the usual McDonald's, Burger King.
I find Sonic's food, I don't know if there's a controversial opinion. There's nothing at Sonic I need. Like 0 at Sonic I need. I don't know who likes Sonic's food, but it isn't this guy.
They have tater tots.
That's it, right? Like I haven't had a potato.
I haven't been there in years, but there used to be one at near my old house that we would go to. The kids liked it.
Yeah. Maybe the Remster likes he's got a taste for the Nutter Butters. Just introduced those into his diet. Lured him out to the car the other day where he didn't want to go somewhere with Nutter Butters. Turns out that was the truth. Oh, that was good parenting on my part. Tony does not think it was good parenting, because now he'll go,
well, it was a bribe. What it was. Let's call it.
I think it's good parenting. You know how you sound really like good parenting, but the way I did it was I got him where he needed to go in the most expeditious manner with the power of Nutter Butters. Oh, and by the way,
have another Nutter Butter peanut butter sandwich cookie. That
Oh,
was their
sweet.
commercial from years
Yeah,
ago.
yeah. Be careful. He'll get hooked on those Nutter Butters. He may be
I
with the
know
Huskies
he
in six.
also likes what we
He'll be in
refer
the
to
Husky
as,
jeans.
I don't know. Have you seen this kid? Maybe it'll be interesting. Like, where is this boy? Hold on. Where is that one where he's like, oh, there's Nora, where he's like super duper tall. Where is
Standing
that
on the
kid?
steps.
Yeah. Oh, that's a good one. Like that's the Remster right now. So I don't know, man. Maybe not too many Nutter Butters, but he also thinks because I said I called Chips Ahoy the pirate cookies. Ahoy! He asked Mama now for pirate cookies.
Arg.
Yeah, exactly. And then look, if you want to get a hold of Danny, there's Danny's Twitter. At one Danny Stewart. Look, the easiest thing to do is just follow us. You'll never get spam. Look, don't be afraid to email us either. That's the other thing too. If you call us or email us, we're too busy to to call you. We don't have any salespeople. If you want to come on board and do the strategies which we espouse and talk about on the show, please do. We have 5 different portfolios. Danny can explain all of them to you. But you're not going to hear from them again. If you don't want to be bothered, you're not going to hear from them. Same thing with email. You're not in some sales loop. We're not a funnel that we're going to keep pounding it. Look, you either want to be here or you don't. You want to ask your question and get an answer and you want to move on. We're here to empower you. So hopefully more and more people are I'll tell you what, telemarketers have absolutely ruined the telephone. People are afraid to answer. They're afraid to pick up. They're afraid that they're going to get caught in some endless sales cycle. This isn't Edward Jones. This is Revere Asset. We stand for something here. Not
If
some
anybody
empty dome.
uses a good robocall blocker on their cell phone, email me, don@revereasset.com. I've been reading about a couple of them, but I just haven't put one on.
I'll email you. I got a couple of them.
T-Mobile, which just merged with Sprint, I believe has a spammer, a spam preventer. All right, Danny just texted me that he's got a noon phone call and it's 11:50. So part of me thinks it'd be funny if Danny just left and the camera stayed open. He's not going to think that's funny.
With you alone, man. Wow.
Yeah, right.
Dan, as the babysitter, there is no way that can happen.
Yes. So let's do this. Let's talk about the 21 over 21. Any moves Don made. I've got a couple things I've bought this week, and then we will. And I'll tell you what. Before we do it, Danny, give them the outro. I don't want you to feel rushed. I know you got this nooner, so give them the outro.
Folks, listen, if you like what you heard, please tell a friend, tell a neighbor, just send them to revereasset.com. They can sign up for our daily market insight. Tim and Don rotate and do a 10-minute market update at the end of each day and give you things that we're looking at, actions we've taken in the portfolio. There's also a webinar sign up for Don when he does his lunch and learns, usually about once a month as time permits. And that's an hour-long webinar at noon on Eastern time on a Wednesday. And even if you can't because you're working, you can sign up for it and he'll send you the recorded video. We're not going to spam you or hound you like Tim said. You can also email any of us at dan@revereasset.com, Tim at Revere Asset, or Don at Revere Asset. You can follow us on Twitter at @1 Danny Stewart, EWART, at TJ Riazor, or at D Vandenboard. Or you can always call us old school at 855 Real Wealth.
All right, Don, what you got, man?
21 over 21 is going to look a lot different when I update it next week. We're talking about a lot of big stocks falling off: Square, Apple, PayPal, Lulu, Microsoft, AMD. Finding some very worthy replacements like Penn and Snap, but that tells you all those type of stocks that I just mentioned kind of fall into the big cap tech category, and that's why I've had SQQQ on and off for about a week and a half now. It's just what was a strength in the market has turned into a weakness. It's that simple, and there's a rotation going on out of those type stocks.
And SQQQ, hang on, SQQQ is the triple short NASDAQ to be able to hedge stocks that he doesn't want to let go of.
And you don't want to look at the leveraged ETFs, whether it's a double, triple. You want to look at either the single or, as I always do, I look at the futures to see to take my signaling from. And so that's just a trick that we always try to tell people. You can see just how perilous holding above this low right here for now. And so we'll see where we end up closing today. See if the market comes in and finds its footing. But very interesting. And there's no big
So we haven't undercut the overnight Wednesday low, it looks like.
Yep, we have not undercut it.
But we have the QQQ has undercut the Tuesday low. So I guess we had a big overnight shakeout that night, and it's not reflected on the chart of the QQQ.
Yeah, and so it's just two different ways of looking at it. I don't know if we're splitting hairs here. Not Don and I aren't, because we just know how we look at the markets. But if you break this low here, you're probably coming into somewhere in this zone here. And so I tell you, I've taken some positions. Like last week, I added TDM, and then right off the video. So Friday held to 21. You can see we're just chopping around here. I'm not at my stop for DDM, and I added BLDR. Don was talking about this on the video. Look at that. That's a beautiful chart. Beautiful chart. And so I added BLDR last Friday as well. And then this week I have added Lennar. And so, Danny, this is an interesting stock because it's going to report on Monday, I believe, after hours. And so I'm inclined, we'll see how it closes on Monday or how it's doing on Monday. I'm inclined to want to hold this. And so I'll have to measure the expected move on the stock, but it's a 2.5, this might be a 3% position, but it's not huge position sizing. Builder was 2.5%. I'm taking smaller position sizes in the market if I'm taking positions in this market, because as long as we hold these lows, I'm comfortable. But if we start breaking, I'm going to have to start selling, which is fine. But right now, I'm comfortable with where markets are. What else you got, Don?
As far as portfolio changes this week, stopped on QCOM, stopped on Fiverr, FVRR, and this has just slingshotted higher to make all-time highs. This is one that is on my watch list. Any kind of that's one of the strongest stocks in the market. I mentioned I added Penn, stopped on Lulu, stopped on NTRA, and added Vive, VEEV. Tight stop on that one, and stopped on Square.
Okay, so my watch list going into the weekend. Oh, let me touch on this. This RH chart, it's coming back today. That's a great earnings call. So I kept that 2.5% position in RH through the earnings, and so that's doing well. I just talked about Lennar, but let me show you Zoom. What's Zoom doing? This is an interesting consolidation that continues to hold. It hasn't given up the ghost, and that is most certainly on. Even though I sold it the other week, it's still on the watch list as I start taking it down to smaller time frame charts. Danny and Don, any last round saved alibis?
Just remember 9/11 and have a good weekend.
All right, we'll see you next week on Your Money.